What's going on, guys? Welcome to the Credit Plug channel. So for today's live, I wanted to piggyback off the video I dropped a couple of days ago in regards to different financial resources for immigrants, whether you're documented or undocumented. So we're going to continue this conversation, and I'm actually going to be breaking down some of the latest news. So some of you may have heard of the bill that was signed in California, which now allows undocumented immigrants to be able to purchase homes where they can get up to $150,000 in down payment assistance. So we're going to be breaking down and going over that program. And I'm going to just be sharing my opinions about all of this that's going on. So before we get into it, I just wanted to lay out some information. Now, there was a study that came out earlier this year, and this is from Axios. And this basically was saying that immigrants and Latinos are the most entrepreneurial in the U.S. And this is a study that found this. So check this out. So new businesses launched by immigrants and U.S. born entrepreneurs. So you see this purple line here. This is represents immigrants, and the gray line might be a little bit hard to see. This is just the overall, population in the United States. And then this orange line is U.S. born, right? So U.S. born citizens. So this is basically looking at the share of adults who started a business from 1996 all the way to 2023. Let me zoom in a little bit more so you guys can see this, right? So when you look at the share of population, right, immigrant populations open up businesses, or the share of adults who open up businesses is much higher amongst the immigrant population versus even U.S. born. So what does this tell you? This tells you that a lot of immigrants who come here are looking for economic opportunities, and they're getting to the bag. That's one thing, I just wanted to sort of highlight, because I know the last video we dropped, a lot of people had a lot of opinions about, how they felt about, immigrants coming here and getting access to all of these loans and lines of credit and, mortgages and things like that. And, this is not anything new, right? This has been available, and there's actually a lot of programs out here, for example, for, let's say, foreign nationals who are looking to invest in the United States. And I just wanted to share with you a couple of examples. I've actually been, speaking with a lot of banks and lenders recently where they're more or less, promoting a lot of these products, right? So in the last video, I mentioned about Plastiq Bank, right? So Plastiq Bank has what's called the Foreign National Investor Loan, right? So again, these are going to be investment property loans. And then again, it's going to be for, non-U.S. citizens. So if anyone wants to invest in a property in the United States, they can get approved for these loans with no credit required, right? And they actually have loans that go up to $2 million for 1 to 4 unit family homes, condos, or planned developments, right? And so again, there's a lot of these programs out here. Another example, HSBC. So HSBC is a multinational bank. They have U.S. mortgages for foreigners. And this is to help newcomers become homeowners, right? And this is another thing too that is, helping the housing market, right? Because, when banks are able to push these mortgages, right, regardless of if you're a U.S. citizen versus a foreign national or an immigrant, illegal, undocumented, whatever the case is, at the end of the day, they're looking to increase their bottom line. So if they have more performing loans on their balance sheet, they're going to make more money overall. So that's the one thing, you have to understand when it comes to, a lot of these mortgage programs, the banks are all for this, right? The banks fully support this because it's going to help their bottom line. And this is another thing I've been telling people as well, like, everyone talking about this housing crash, waiting to buy houses when the demand for houses is increasing. So by bringing in, other people from other countries in promoting these different loan programs, that's increasing the demand. And as we know, the supply right now is constricted, right? It takes about, 18 months to even as long as 2 years to build a house. So that's only going to keep the housing market elevated, right? So again, there's a lot of opportunity regardless, of what your citizenship status is. But as far as like the promotion of this is huge. Another example I wanted to share with you. So I actually bank with Cathay Bank, which is, I believe it's like the third largest minority depository institution, right? So they have these non-resident mortgages, right? So as you can see right here, and the way I actually found out about this, I was talking to my banker there, and they were basically saying, I told them that I work with a lot of clients, and they were really pushing this. So Cathay Bank is really more or less geared towards, let me just say this, it's Asian banks where, it's an MDI. So it's the majority ownership is Asian, right? And so they have, this non-resident mortgage, let's say for Chinese nationals who want to purchase a home in the United States, and they want to, let's say, purchase an investment property, they're able to do so. So, and it's not just investment properties. This could be, primary residences as well. Another thing about these programs too is that oftentimes there's incentives for, let's say, someone from a different country who wants to come to the United States. I would say this is usually through like the State Department, where, let's say, if you open up a business or you invest a certain amount of money in the United States, you can get, citizenship or green card, stuff like that, not just for you, but also for your family members. So a lot of times, when you might see someone, it might be a family run business. A lot of times, they'll invest a certain amount where they're able to bring themselves and their families over, due to that investment. And so, there's a lot of opportunities like this. Another one that I wanted to share with you guys was, hold on, let me see where this is at. So I've talked about ACC mortgage, right? So ACC mortgage, all credit considered, they have a foreign national program. And as you can see, this is for foreign nationals only, up to 75% loan to value, investment properties only. And so again, this allows, foreign nationals to come in and invest throughout the United States. So stuff like this is nothing new. So I just wanted to just put that out there, right? But going back to what's been in the news recently, and let's just pull this up. I just wanted to kind of share with you guys exactly what's going on. So let's see, immigrant loan. All right. So a lot of you probably heard about this. So this is called Assembly Bill 1840. Now, if anyone actually wants to look this up, you can read this in its entirety. But pretty much this was a program, and let's go over exactly what this program is, right? So through the California Housing Finance Agency, they have what's called the California Dream for All Shared Appreciation Loan. All right. And I'm going to explain why I think this is somewhat of a finesse. I know a lot of people are upset about this, where, now they're allowing undocumented immigrants to partake in this. But when you look at the fine print, again, it's called a shared appreciation loan, and I'm going to explain exactly what it is. Now, before I go into all the details, basically my understanding of this is there's basically two different loans, right? So you have, let's say, a regular loan, right? So this could be a FHA, a conventional loan. Basically, with this shared appreciation loan, it's like a second mortgage or a second loan, but it's used sort of as that down payment. And let's actually look at an example of how this would work, right? So let's look at this real quick. Sorry. All right. So if you guys can see this graphic, let me blow this up to kind of show you. So pretty much what they're offering is a up to 20% or $150,000, right? So 20% not to up to $150,000. So in this example, let's say it's a $500,000 house. They're going to have a first mortgage, and then they're going to have the DFA loan, which again is part of that down payment. So instead of you having to come out of pocket for your down payment, they're basically going to give you a second loan that can be used towards the purchase of that home. Now, the reason why I was saying this is kind of a finesse is because it's a shared appreciation. So since they're giving you 20, let's just say in this example, 20%, when you go to sell the home, basically they're going to take 20% of the equity. That's why it's called a shared appreciation, right? So they're taking 20% of the equity when you do sell. So unlike, let's say if you just bought a home just with a regular mortgage, let's say you put, 5% of your own money down or 3%, whatever the case, you get all the upside in the appreciation of that home. So pretty much what they're doing is they're giving you a loan, and they have different options where they have some where there's no interest on this, I guess, second loan. And then there are other scenarios where you do have to pay interest on it. So pretty much they're giving you a loan where you may or may not pay interest on it, depending on the program. And then when you go to sell, you're actually going to be splitting sort of a prorated, appreciation. So in this example, let's say 5 years later, so that's the scenario. 5 years later, the home value is now $640,000. So at first it was, when they bought it, it was worth $500K. It's appreciated $140,000. So in this example, the homeowner share of the appreciation is $119,000. The DFA share of the appreciation is $21,000, right? So again, it's shared appreciation. So they're basically splitting up, the appreciation upon the sale of the house, right? So that's pretty much how it works. You're basically getting two separate loans. So let's go over the exact details of this program. All right. So the California Dream Shared Appreciation Loan. So I just want to read this out. So the Dream for All Shared Appreciation is a down payment assistance program for first-time homebuyers to be used in conjunction with the Dream for All conventional first mortgage for down payment and or closing costs. Upon sale or transfer of the home buyer repays the original down payment loan plus a share of the appreciation in the value of the home. So pretty much through this program, they're pretty much getting, essentially profiting off of the appreciation of the home. So you're pretty much breaking bread, I guess, with the California Housing Finance Agency. I don't know what they do with that money, maybe, put it back into the pot. But pretty much you're splitting some of the appreciation. So yes, the good thing about this is that potentially you can purchase a home with no money down, right? So they basically offer up to 20% for down payment or closing. So let's say you choose the 20% for the up to the max of 20% for the down payment. You would just have to be out closing costs. That's basically what you'd have to bring to the table, right? And again, this is not to exceed $150,000. So in order to be eligible for this, you must be a first generation home buyer. So at least one borrower must be first generation. All borrowers must be first time home buyers, right? So first generation is going to be sort of, the first in your family to purchase a home. First time home buyer would be, this is your first home that you're buying. Now, they do have income limits. So let's just check this out real quick. Again, this is going to be based off of the county in California. So these are the maximum income limits, just to kind of give you perspective. These limits are relatively high, like all in the six figures. So what this tells me is that, in terms of eligibility, this is going to cast a pretty wide net in terms of people who would be able to qualify for this. So if you make under these amounts, you're going to be eligible to participate in this program, if you're purchasing a home in the state of California. As you can see, the maximum loan limits are, fairly high, depending on, what county you're looking at. But all of these maximum income limits are going to be in the six-figure range, right? You look at Alameda County, 246,000. I mean, unless you're like, upper middle class, I guess you probably wouldn't qualify for this. If you're making, in some of these, like Marin County, 295,000. So like they set the bar pretty high in terms of maximum income. So a lot of people probably would be able to qualify for that, right? Now, a couple things I also wanted to just go over, right? So this graphic over here shows like the percentage of people who actually were able to participate in this, right? So right here it says the first phase of the California Dream helped 2,182 new home owners purchase a home, with 55% identifying or self-identifying as belonging to communities of color, right? So when we look at this breakdown, right? All right. So you have, African American or American Indian, Black, African American, Hispanic, white, non-Hispanic, Latino. So when you look at this, right, just one thing to notice, you see the Black African American 3%. So very underrepresented when it comes to this program, right? As you know, the Black population is about 13 to 14% of the U.S. population. But when talking about representation in this particular program, only 3%, which is, much less represented. When you look at the Hispanic Latino, 33%, white, 35%. And so just to kind of, give you some statistics on that, just kind of who's, taking advantage of this. Now, let's go over, I wanted to go over sort of the, let's look at the details, right? So this book basically spells out all the eligibility criteria. So when we look at this, let's zoom out a little bit. All right. So borrower requirements: be either a citizen or national of the United States or a qualified alien. Now, one thing I just wanted to let you guys know, like, this isn't just a specific to immigrants, right? Anyone can basically qualify for this program in the state of California. So basically what this latest bill is to also include undocumented immigrants, or as they define it, a qualified alien, right? In terms of, being able to qualify for this. So it's not just, relegated to like a specific group. Now, they have these definitions for first-time home buyer. So to qualify, all borrowers, including co-borrowers, must reside in the home and meet the definition of a first-time home buyer. A first-time home buyer is defined as a borrower who has not had an ownership interest in any principal residence or resided in the home owned by a spouse during the previous 3 years. So, if you're an undocumented immigrant coming to the United States for the first time, more than likely you're going to meet that first time home buyer definition. And then they also have first generation. So a first generation home buyer is identified as a home buyer who has not been on title, held an ownership interest, or have been named on a mortgage to a home in the United States in the last 7 years, right? Let's see what else. So in terms of the loan programs, right? So max LTV, 97%. This is for the Fannie Mae Advantage. And then let's see, in terms of, let's look at the underwriting, as a matter of fact. All right, so this is going to be for purchases only, 30 years. Let's see, max LTV, 97%. Combined loan to value not to exceed 105%. All right. Income limits, we just went over that. Now, in terms of the income requirements, right? So right here it says lenders are required to calculate income to qualify the borrowers for loan approval using Fannie Mae guidelines. All right. So basically, credit qualifying income determines if the loan exceeds the maximum program income limit. Income not used by the lender for credit qualifying will not be used, right? So right here it says they use this Fannie Mae Home Ready tool to determine if the borrower's income is less than or equal to Home Ready's 80% area median income, AMI, lower income limit to be eligible, right? In terms of the qualifying ratios, so the maximum total debt to income cannot exceed 50% for borrowers with credit scores greater than or equal to 700, 45% for borrowers with credit scores less than 700. Okay, so if you have a higher credit score, you basically can have a higher DTI. But if you have a credit score less than 700, then basically your DTI would need to be lowered, right? So right here it says the minimum credit score is 680 for borrowers with incomes greater than Home Ready's 80% AMI income limit, right? The minimum credit score is 660 for borrowers with income less than or equal to Home Ready's 80% AMI. So borrowers with no credit score are not permitted. Non-traditional credit is not accepted, all right? Now, right here it says all borrowers must meet minimum representative credit score requirement. The middle score or the lowest scoring borrower should be used to determine eligibility. Now, basically what this means, they're going to look at your mortgage scores and take the middle score. Now, if there's two people on the loan, they're going to take the lower middle score. That's usually how it is. Like, let's say if, it's two married couples or, whatever the case is, right? You have a married couple, husband and wife, or, whatever the case is, they're going to look at the lower middle score. So whoever has the lower middle score, that's basically what's going to be used to sort of qualify you for that mortgage, right? In some cases, it may even make sense. Let's say if one of the two people on the loan has a really low credit score, you may not even want to try to qualify them if it's going to be less than what the requirement is, right? So if their if the lower middle score is not at least a 660, then it is not going to work, right? Now I'm not going to go into all of this. This is just pretty much basic stuff. Now let's go over the rates, right? So right here shows the current interest rates as of August 30th, 2024. So as you can see, they have these different loan programs. So they have conventional, they have, high balance. They also have what's called these ZIP programs, right? So zero interest program. And this is going to be on the first mortgage, as a matter of fact. So when looking at these rates, right? So here's what we were talking about: the Dream for All conventional, standard rate lock 6.375%. Low income rate lock 6.1%. So, I mean, this is, in the current interest rate environment, I guess fairly decent, right? 6.1%. That's not too bad, given, the current interest rate environment we're in. But yeah, this is pretty much, the requirements. Let's see what else. Sample APRs. Okay, so like this is just some different scenarios, right? This is basically like a sample loan. Let's say 350,000. They basically just give a breakdown of, let's assume it's a 30-year term, monthly loan payment, the APR. They just give basic scenarios. This scenario down here is with a $450,000 loan. Let's see what else. We already went over that. So, I mean, overall, I think that, looking at these programs, the shared appreciation, I don't think it's that great, because again, you're going to have to share in the upside once you actually sell that property. So, I think this is probably blown out of proportion. They're basically giving out a second loan to go towards the down payment and the closing costs. But it is an opportunity. Let's say if you are an undocumented immigrant, maybe you don't have the money to put towards, 20% down. This is a program that could be utilized to be able to get access to, a home in the United States. And again, there's a ton of other programs out there. This is just one where they're doing this, second loan to help with the down payment for purchase. And it's interesting to see how, other states might respond to this. I think it presents a huge opportunity for a lot of banks, a lot of lenders, because it's just going to increase the market for, customers, right? So, banks are out here to loan. And if they know that, this particular borrower is going to have that down payment, it's just going to make it easier to close on the loan, right? So I don't know, like I know a lot of people were up in arms. Now, this Dream for All shared appreciation loan has been available for California residents previously. It's now the fact that it's opened up, to other groups as well, particularly undocumented immigrants. But I also wanted to go over some other resources that are available to, the undocumented immigrant population, right? Now, this is something that I wanted to just, go over with you guys. So you guys could check this out. So this is going to be on FEMA, right? So this has the fiscal year 2024 awards, right? So let me zoom in a little bit on this, right? So you see this right. So for the fiscal year 2024, the U.S. Department of Homeland Security, DHS, will provide $640.9 million of available funds to enable non-federal entities to offset allowable costs incurred for services associated with non-citizen migrant arrivals in their communities. So just to be clear, this is a federal government entity, right? Department of Homeland Security has allocated for this year, for 2024, $641 million. And you could look this up. So they basically had several rounds of funding, right? So they had, first round with 275 million, the second round with 25 million. And you could actually see who actually received these awards, right? Like all of this is public information. So let's just go over this real quick. All right. So right here you have the city/county of Denver. So Denver County, Colorado, $5.9 million. You have DC, $2.7 million. City of Chicago, $3.8 million. And this is just the first round. I mean, then you have a bunch of these organizations, right? So you see here, Catholic Charities, San Diego, $19.5 million. You have a lot of these Catholic churches, they're getting, millions of dollars, and this is going towards, the migrant population, right? So you could literally look, I mean, there's over 55 entries on here. You have the Commonwealth, Massachusetts, almost $7 million. I mean, it goes on and on, Chicago, again, Cook County, $9.6 million, City of Atlanta, Fulton County, Georgia, $10.8 million allocation. So again, every year, hundreds of millions of dollars of taxpayer money is actually going towards, assisting with this crisis that's going on. So the thing I also wanted to just ask you guys is, how do you feel about this, right? You have, taxpayer dollars going to, a lot of these services when a lot of, cities are actually having a budget deficit, right? And things like this is definitely adding to the budget deficit. But again, this is at the federal level, right? So they're distributing that 641 million out to these different jurisdictions. Some other resources they have what's called the newcomer rental subsidy, right? So the newcomer rental subsidy, so this is in Michigan, provides refugees and other newcomer population eligible households with rental assistance up to $500 for 12 months with eligibility based on immigration status and household income. So again, right here says $500 per month for 12 months. So when you calculate that, that's about $6,000 per year per, newcomer, migrant, whatever you want to classify it as, right? So there's a lot of these state programs. A couple other things I wanted to just go over too. So as a lot of you guys know, New York City has been one of the epicenters for this, so-called migrant crisis, right? And so Eric Adams has, campaigned for additional funding to basically help solve this issue or alleviate the issue. So right here it says New York City signs $77 million contract with hotels to house migrant families. Now, again, this came out earlier this year, back in January. But again, a lot of these hotels are benefiting from this because they're getting these state and city contracts to house these migrants. So you also got to think, there's definitely some economic interests, with this, right? And all at the expense of American taxpayers. This is another one from August. I'm sorry, not August. This was from earlier this year. But as you can see right here, Mayor Eric Adams signs $275 million deal with hotels to house migrants, right? So Eric Adams agreed to a $275 million contract with the Hotel Association of New York City to house 5,000 migrants. So you think about 275 million for 5,000 migrants. I don't know what the math on that is, but that seems like a lot. That seems like a lot just for only 5,000, right? So again, these are just other examples how, a lot of these taxpayer dollars are going towards this. This is another one, right? So this is basically looking at the overall budget for the state. So there's a $233 billion budget proposal to address migrants' education and healthcare. And one thing I wanted to highlight right here. So it says the $233 billion proposal includes roughly $6 billion in increased state operating costs due to education, healthcare, and migrant spending. The state budget director says that the state was able to close an over $4 billion gap in the upcoming fiscal year due to larger than expected tax revenue collections, right? So, a lot of this is being funded through, taxes from American citizens. Another thing I wanted to lay out is that a lot of states have these refugee transitional cash assistance programs. So, you could do some research. I'm just showing you guys a couple of examples. This right here is actually in the state of Maryland, where they have what's called a refugee transitional cash assistance. So let me just go over this real quick. So basically, this is a state administered and federally funded temporary financial assistance program to support eligible clients until they secure employment and become economically independent. So basically, in order to be eligible, have held an eligible and documented immigration status in the U.S. So let me see, currently 12 months after arrival or after an asylum grant. So this, I believe, would be more so for documented immigrants. But again, each state might have different requirements. Basically, these are just, cash programs, right, where they're able to get access to cash. DC also has, a similar program as well. So again, pretty much every state, you look these up, they have these cash assistance programs for refugees. I'm not going to go over all of these, but pretty much there's a ton of resources for, migrants, whether, you're documented, undocumented. And I just wanted to, talk about this issue. I know a lot of people have some strong opinions about, what they felt about it. And again, this isn't to pit, immigrants versus, native US born citizens. At the end of the day, when we're looking at, banking, finance, they're looking to provide financial services, right? Regardless of what your status might be. So that's just one thing to look at it. And then on top of that, the other thing I wanted to remind you guys is that a lot of these, banking programs and down payment assistant programs are eligible to most Americans. Like, it's open. It's not like a secret. But what I will say is that there are incentives for foreign investment into the United States. As I showed you earlier, a lot of these banks where they have these foreign national programs, it's to encourage investment into the United States, right? So, at the end of the day, when you look at it, there are some net positives when it comes to just overall immigration, whether that's legal or, illegal immigration, right? Because, you're going to have more consumers. You're going to add more people to the labor force. And, mind you, I would assume that most people are coming here to seek out economic opportunities to work. So hopefully increasing the overall productivity. You guys could probably notice it too in like certain areas where, for example, I know in DC, there's like a big thing with, certain immigrant populations when it comes to like food delivery and things like that, where, they're coming in, they basically have come and taken over, right? Where essentially, I'm not going to say undercutting, but they're on the grind. They're trying to make money. They're trying to, make a living just in the same way as other Americans. So, there are some, I would say, net positives, but I could also see how certain people might, feel offended or taken aback or feel like, these different programs may be preferential to people who've already been here, whether that's, veterans or Americans who are homeless or Americans who are struggling. The one thing that I guess also, people have a big issue with is a lot of these programs are being funded through taxpayer dollars, right? So, I guess the argument is, why aren't a lot of these tax dollars being focused on the American people, right? People who've been here, maybe people who have gone through the process, the traditional process where, they were able to go through the legal route of obtaining citizenship or green card or, whatever legal status to be in the United States. But again, it's all going to vary from state to state. And I think that's why it's important to understand, what some of the ramifications are based off of, who you're voting into office, right? Whether that's at the national, state, local levels, right? Because that's where your tax dollars are going to be allocated, right? And you just have to, have some insight into that, where your money's going, how it's affecting you, and what the overall impacts are. So at the end of the day, like I said, a lot of these financial resources have been around. There's a lot of banks who offer these cross-border mortgages. I've even, had banks reach out and, trying to promote these, right? Because at the end of the day, when it comes to the banks, they don't care. Like, a performing loan is a performing loan regardless of, who that loan belongs to, right? What your citizenship status is. So at the end of the day, they're looking from the lens of, okay, it's increasing the customer base. You have more people, buying goods and services in the economy. So, in that regard, I guess you could say there are some benefits, but I could definitely see how it might come across where, let's say U.S. citizens might feel as though it's like, why are all these programs being made available, to people who have not been here or may have not come here legally? And a lot of Americans who were born, live here, pay taxes are struggling right now. So I could see how, it could somewhat be divisive. But at the end of the day, America is the land of opportunity. So, you have to seize the opportunities that are available for you. And I personally don't think it takes away from other, let's say, financial opportunities and, banking opportunities and things like that. Like, there's so many different banks. We talk about different financial resources. So I don't think it's taken away. Again, going back to this new bill that California just passed, with this, what is it? The Dreamers Home Appreciation Loan or whatever it is, that's been available. So it's just, they're just opening up who it's available to, which is now inclusive of undocumented immigrants. And I think it will be an overall boost to the housing market, used to strengthen the housing market. Lenders are definitely going to benefit from it. So like, I know a lot of, mortgage companies are now going to want to be approved lenders within the California Housing Finance Authority, right? Because it's going to open them up to a wider client base. So, there's a lot of different ways to look at it, but it's definitely a hot button, issue, so definitely let me know what you guys think in the comment section down below. That's all for today's video. Until next time, take it easy and we'll talk to you soon. Peace.